You are watching a stock price in free fall, dropping steadily over a matter of weeks until it exactly hits your target. The pattern responsible for triggering this specific measured drop is called the Eve and Adam double top. This setup is highly sensitive to the broader market context. It performs exceptionally well, specifically during a bear market, thriving when the general market trend is already pushing prices downward. Over the next few minutes, you will learn how to visually spot the distinct shapes of this pattern, exactly where to draw the confirmation line to enter the trade, how to filter out bad setups using historical chart data, and how to calculate a mathematically conservative profit target. By following these specific steps, you transform a chaotic chart decline into a highly structured trading plan with a strong historical win rate. Step 1 is identifying the structure. You are looking for a stock in an upward price trend that suddenly forms two distinctly mismatched peaks. This chart shows the classic formation. On the left is the Eve top, a wide, rounded arch. Right next to it is the Adam top, a sharp, narrow, inverted V shape. For these peaks to qualify, their highest prices must be within 3% of each other, separated by 2 to 6 weeks. Between the tops, a distinct valley must drop 10 to 25%. The absolute lowest point of that valley is where you draw your confirmation line, your ultimate trade trigger. The most common mistake traders make is jumping the gun. They see the sharp Adam peak forming and immediately short the stock before the pattern is fully formed. The unbreakable rule for entry is waiting for the daily price candle to completely close below your confirmation line. If the price doesn't close below that valley line, you simply have squiggles on your screen. Entering without that confirmed daily close results in a 65% failure rate. Even a perfectly shaped double top will fail if you ignore the broader historical context of the chart. This chart shows how older price action can trap you. Always look to the far left side of your screen to check for historical price congestion. That older congestion acts as an impenetrable floor. Notice how the price breaks down from the double top, but stalls exactly where buyers previously stepped in. This chart shows our secondary filter, the volume bars located at the bottom of your screen. When grading the quality of the setup, look for a curved, dome-like volume distribution under the pattern. Historically, this yields the best performance. The data also reveals a highly counterintuitive fact. Unusually light volume on the actual breakout day signals a deeper, better-performing downward trade. Once your filters are cleared, you need an exact exit strategy. We use the measure rule to calculate a precise take-profit target. This chart shows the first step of the math. Find the total pattern height by measuring the distance from the highest peak down to the confirmation line. That gives us a total height of $3.20. To be conservative, divide that height exactly in half to get $1.60. Finally, subtract that $1.60 from your confirmation line. 3170 minus 160 gives us a final target of exactly $30.10. As a final execution tip, set your buy-to-cover order slightly offset from a round number. Place it at 2807 instead of 28 flat. This ensures your order fills before predictable crowd psychology creates a bounce. Layering historical support checks with conservative math increases your odds. In a bear market, following these strict parameters yields a nearly 80% hit rate. You now have a start-to-finish system for trading the Eve and Adam double top. To review your 4 requirements: first, verify the wide Eve and narrow Adam shapes. Second, wait for the daily candle to close below the confirmation line. Third, verify the path is clear of historical support and check the volume. And fourth, calculate your half-height target. Your next step is to open your own charting software. Scroll back to a previous bear market and manually find 3 of these patterns. Practice drawing the confirmation lines and calculating the half-height measure rule on paper before you risk real capital. Spotting shapes on a chart is just the beginning. A real trading edge comes entirely from applying strict rules, filtering out bad setups, and executing your math with discipline.